This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The U.S. plans to buy 1.2 million barrels of oil to help replenish the Strategic Petroleum Reserve after it sold off the largest amount ever last year, the Energy Department said on Monday. The department said the planned purchase for the oil is at an average price of $77.57 a barrel from two companies after 18 bids were submitted. The administration of President Joe Biden last year conducted the largest ever sale from the SPR of 180 million barrels, part of a strategy to stabilize soaring oil markets and combat high pump prices in the aftermath of Russia's invasion of Ukraine. If the purchase is finalized, it will have bought back about 6 million barrels. Oil prices inched up on Tuesday on expectations of healthy market fundamentals, following an OPEC report saying demand remains strong, and concerns that supplies might be disrupted as the U.S. cracks down on Russian oil exports. Brent crude futures gained 30 cents, or 0.36%, to $82.82 a barrel by 0413 GMT. US WTI crude futures climbed 28 cents, or 0.36%, at $78.54 a barrel. Following the heavy sell-off in the market over the last 3 weeks, oil has managed to find some support. While fundamentals may not be as bullish as initially thought, they are still supportive, with the market likely to be in deficit for the remainder of this year, analysts said in an email note.
Moving on to the top news in the energy sector.
U.S. oil output from top shale producing regions is set to decline in December for a second consecutive month, the U.S. Energy Information Administration, AIA, said in its monthly drilling productivity report on Monday. Oil output is expected to drop to 9.652 million barrels per day, BPD, in December, from an estimated 9.653 million barrels of oil per day in November, the EIA said. Output from the Permian Basin of Texas and New Mexico, the top shale producing region in the country, is set to rise to a record for a sixth straight month, the EIA said. The pace of growth, however, is expected to slow, the agency noted. The U.S. Treasury Department has sent notices to ship management companies requesting information about 100 vessels it suspects of violating Western sanctions on Russian oil, according to a source who has seen the documents. The notices, sent by the Office of Foreign Assets Control to ship management companies in about 30 countries on Friday, represent the biggest step of its kind by the United States since Washington and its allies imposed a price cap aimed at restricting oil revenues to Moscow as punishment for its invasion of Ukraine, the source said. The Treasury Department would not comment on the reporting. While we do not confirm or comment on investigations or enforcement actions, Treasury is committed to enforcing the price cap and reducing Russia's resources for its war against Ukraine, a Treasury spokesperson said.
Next, we have the top news in metal markets.
Negotiators for EU governments and lawmakers reached a deal on Monday on targets for domestic supply of critical minerals such as lithium and nickel to reduce its reliance on third countries, principally China. The European Commission proposed the Critical Raw Materials Act in March, a centerpiece of EU strategy to allow it to compete with the United States and China in making clean tech products. The proposal said the European Union should extract 10%, recycle 15% and process 40% of its annual needs by 2030 for 16 strategic raw materials. Gold prices were stuck in a narrow range on Tuesday as investors refrained from taking big positions ahead of U.S. inflation data that could offer more clarity on whether the Federal Reserve is likely to raise interest rates further. Spot gold was flat at $1,945.40 per ounce, as of 0733 GMT, after hitting its lowest in more than 3 weeks on Monday. U.S. gold futures were also steady at $1,949.50. Market participants across the globe awaited U.S. Consumer Price Index, CPI, data due at 13:30 Greenwich Mean Time on Tuesday and Producer Price Index data due on Wednesday.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures rose more than 2% on Tuesday as trading resumed after a long holiday weekend, with gains in rival Dalian and Chicago soy oil prices and a weaker ringgit supporting the market. The benchmark palm oil contract for January delivery on the Bursa Malaysia Derivatives Exchange had climbed 90 ringgit, or 2.37%, to 3,892 ringgit, $824.93, a metric ton by the midday break. Malaysia's financial markets were closed on Monday for a public holiday. Trading resumed on Tuesday on a positive note, borrowing strength from CBOT, Chicago Board of Trade, soybean oil and Dalian palm olein, said a Kuala Lumpur-based trader.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.